Welcome to the Shareholder Q&A session hosted by Royal Dutch Shell. Today's session is being recorded. People dialed in, if you have a question, please press star 1. If you wish to be removed from the queue, please press star 2 now. I would now like to introduce the host of the session, Sir Andrew Mackenzie.
Thank you, Alan. Ladies and gentlemen, good afternoon, good morning, and thank you for joining us today at such short notice. My name is Andrew Mackenzie, and I am Chair of the Board of Royal Dutch Shell plc. And I'm joined today by Ben van Beurden, Shell's Chief Executive Officer, and Jessica Uhl, our Chief Financial Officer. In this one-hour session, we hope to address your questions on the simplification proposal that the board has announced today. The proposal will enable Shell to change its dual AB share structure to a single line of shares and its tax residence to the UK, which is its country of incorporation. The simplification is designed to make Shell more competitive, to accelerate distributions to its shareholders, and to speed up its transition to a net zero emissions energy company. Your board believes that the proposal is in the best interest of shareholders, and we strongly recommend shareholders to vote in favour of the changes to Shell's articles. With this short introduction, let us now move on to your questions. So please, could we just have one or two each so everybody has an opportunity? And with that, could I have the first question, please? Alan, thank you.
Thank you, sir. We will now begin the question and answer session. Phone callers are requested to immediately mute the audio on their computer webcast and listen attentively to the telephone audio as we begin to progress through telephone questions. Again, if you'd like to ask a question, please press star 1. If you wish to be removed from the queue, please press star 2. We'll take our first question from Biraj Borkhataria with RBC.
Hi, thanks for taking my questions. Two, please. The first one is, under the new structure with one share class, I remember speaking to Ben at one of the events, and you said you wouldn't consider a Dutch auction for the Permian proceeds and the way that would be returned to shareholders. Given that you'll be moving to one share class, does that now come back on the table? So that'd be the first question. And the second question is around portfolio change. So in one of your points, you mentioned that this would allow you to manage your portfolio with greater agility. But looking back a few years ago, you did the BG deal with a dual share class, and so it can be done without that. I was just wondering if you could go into a bit more detail on the advantages of having that single share class and what that means for how quickly you can buy or sell assets. Thank you.
Well, I think what I'll do is I'll ask Ben to handle the first question, given that you've already had a conversation with him. I think in terms of portfolio actions, it's clear with the new structure that we will be able to consider a much wider range of options with a single line of shares. And perhaps, Jessica, you might want to add to that, and then Ben.
Okay. So, Biraj, thank you for your question. And you referred to the BG transaction and how we were able to affect that transaction in the current construct. And indeed, we were able to do so, but it required us to engage with the Dutch government beforehand. And so it's not necessarily the most efficient or effective process in terms of achieving the outcome. That's one piece of it. In order to affect the transaction, we had to put it within the dam structure. That dam structure then has knock-on effects in terms of how dividends are used within that construct in terms of paying our ultimate shareholders. So both in terms of our capacity to do the transaction, the current construct is not efficient. We were able to work around it, but we think in this day and age where the pace of the energy transition is happening quite quickly, things that require us to find workarounds is not really the most competitive starting position for us. So we believe making this change puts us on equal footing with our peers and takes away the constraints that are currently in place that require us to engage with the Dutch government in order to affect these transactions. And then once those transactions take place, remove the constraints with respect to how we actually structure the company and how dividends flow within the company going forward. Ben?
Ben?
Yeah, thanks very much. Thanks, Biraj, for your question. And indeed, I do remember you asking that before. Well, first of all, we haven't, of course, formally decided how to return these proceeds to shareholders. We will decide and announce that once we have the money. But the other thing I would say at this point in time already is that you have to bear in mind that auctions are not always successful. And you may therefore not be able to fully return everything in that particular auction. And our intention is very clear. We want to return the full $7 billion. So we'll have to consider exactly how we do it. But I think it's fair to say that the default position that we are starting off with is share buybacks.
Can we have the next question?
Certainly. The next question will be from Oswald Clint with Bernstein.
Oh, hi. Thank you very much. Perhaps there's a follow-on question from that. The point about agility, the other point about speed of change and the unprecedented speed that things are happening. I'm just curious, as we put those together, if talk about, is there anything you think you've missed here, or you kind of regret not being able to put into the portfolio the last couple of years? Anything you really need to position yourselves more strongly looking forward? And it's mostly related to the kind of low carbon business, please. And then perhaps if we could just ask perhaps Jessica just to confirm or just talk about how solid the income tax payable back into the Netherlands is at $0 to $0.4 billion. Is that a good, solid, robust number at this point? Thank you.
Okay, look, I've only been here for a short period of time, and perhaps Ben would like to discuss the last 2 years about some of the things that we may have done differently. But I do believe, though, that with what we've done in the more recent past, in introducing our Powering Progress strategy, in simplifying or reshaping our organization, that what we now have is a simplification of the financial structure so that we can go faster and can go more agile. And I think ways that many of you can imagine, but Ben, maybe some specifics and then over to Jessica.
Yeah, thanks very much, Oswald. I think it would not be appropriate to look back and say what are the things we didn't do because we didn't have the agility in our financial structure. I think that would not be a useful way of looking at it. I think it's more important to look forward. I think we can all see that we have to go faster. Everybody will have to go faster. We will have to perhaps change some of the structure in our portfolio. Maybe we'll have to acquire, maybe we have to sell, maybe we have to do creative constructs also from a funding perspective in different parts of our business. And all of that at some point in time is going to have a bearing on this complicated financial structure that we have and will limit our options. I think it would be too far to say, and you probably would have known it, had we said, listen, here we lost a particular transaction because our share class structure was somehow acting against us. But the fact that we have the limitation, I think, is enough for us to want to eliminate it. It's a Dutch saying, you better hurry when you have time, so that you have time when you have to hurry. And that's a little bit what's going on here as well.
Jessica?
Yes, and indeed, it's about taking action when you can, not necessarily when you need to. And this is really about setting us up to succeed going forward. In terms of the tax question, Oswald, the tax is a corporate income tax that will become due when, should shareholders support this and the board decides to move forward. When we execute the move, this tax would become payable. It's clear in terms of Dutch tax law that is payable. The exact calculation of it is less defined. We've hired a number of external advisors and have reviewed this both internally and externally over several months, and I believe it is a very robust number in terms of the expected outcome.
Thank you, Jessica. Can we have the next question, please?
All right, and your next question, yes, sir, will come from Roger Reed with Wells Fargo.
Yeah, thank you. And simplification. We always like simplification here on the sell side, so thanks for that. But the real question I have is, and from what you've said so far, what's in the press release, it's all about, I guess, flexibility and speed. So can you give us an idea at all of maybe a timeline of what sort of improvement in timeliness or speed you would anticipate versus what you were, or maybe I should say currently are dealing with?
Well, I mean, I guess our best timeline that we've already mentioned, I think particularly in some of our recent results, has been our ability to return money to shareholders through buybacks. And that was something that with a single line of shares, we could, if we consider this as the right way to return the proceeds of the sale of the Permian to the shareholder through buybacks, we could actually do that quite a bit quicker if we were operating just for a single line of shares with the new structure that has been proposed today as opposed to the old structure. I don't know if that's anything you want to add to that, Jessica?
So indeed, there's a number of different constraints that are on us that we're looking to remove that would improve kind of the tools that we have at hand with respect to our capital structure and our corporate structure. So on the capital side, it's in relation to potentially issuing capital, where we have constraints in terms of our ability to issue B shares at the moment. It's also on the side of distributing to our shareholders and facilitating that in terms of the quantum of share buybacks we can do and the pace at which we can do it and the potential cost of doing it. All of that improves with this proposal. On the corporate side, we then have more flexibility in terms of how we want to organize the company, how we want to shape the portfolio. I think this part of our current construct is probably less known or understood in the marketplace, but tied to the A and B shares is a very static structure in terms of how dividends are paid. And in this day and age, we want things to be more dynamic and we want to be fully in control of how we structure our portfolio. Today, we can't do that. So whether it is spinning off a portion of the business, if it's selling a portion of the business, we have dividend flow considerations to take into consideration, which isn't typical for a company. And again, we want to remove those constraints so that we can simply focus on the business at hand rather than on some of these administrative issues that would get in the way going forward.
Okay.
Okay, let me just ask one follow-up on that. When you talk about a better way to pay dividends or maybe a more simplified structure, is there a savings number we should think about, a synergy number here, maybe ultimately a different corporate structure of the company that, reduces overhead costs? Is there any of that as a possibility? Thanks.
So Roger, I think it's fair to say those possibilities exist. We didn't use a number to make this decision. It's really about creating the capacity and the ability to affect change, whatever that change may be, and be able to do it at pace and be able to do it on our own terms. So it's really about the ability for the company to act quickly and to make those types of choices in the future without having to engage with a government counterpart in order to make that be true, or to be constrained by some of these unique elements of our structure that certainly provide no benefit. And we strongly believe by removing those constraints, it gives us more degrees of freedom, more tools in the toolkit in terms of affecting whatever change we may want to make from a capital perspective or a corporate perspective.
Thanks, Jessica. Look, I too am a great fan of simplification. And in my experience, many of the things that Jessica has spoken about, the things that you've mentioned as possibilities, are all things that will add to savings, if you like, or greater value creation in the future. Sometimes hard to be precise exactly where they will come from, but simplification does undoubtedly make companies better. So maybe we have the next question, please.
Certainly. We'll next go to John Rigby with UBS.
Thank you. Two questions, please. The first is, I guess this kind of raises an issue of the capital structure full stop, because, the CFFO number drives a potential share buyback number, which, fairly clearly with the Permian was not achievable with the previous, or not achievable economically with the previous structure. But we've focused on the structure, but it also sort of suggests that or the question is the layout of the strategy and the CFFO calculation that drives the buyback, does that work in $80 plus oil markets? Does the split between balance sheet, buyback, capex, and then I guess the choice around additional capex, does that still hold as oil prices move significantly above, I guess, where you would have envisaged they were when you set out Powering Progress? That's my first question. The second one is in the last quarter or so, is that having sort of pushed back quite hard on the Dutch court ruling around your emissions outlook, is that you were able to come up with a new plan, or a sort of an evolution of the plan, which actually basically addressed those quite ambitious or quite aggressive emissions reductions. And you said you could do it within effectively the financial plan with the financial outcomes, etc. And right now, after sort of 15 years of this sort of temporary AB structure, you've announced a consolidation, which, if I understand it correctly, could be done within 3 months. So the question is internally within Shell, has there been a sort of block about doing these quite big decisions and changes, which seem structural and seem very difficult to do, but actually, as it turns out, with a bit of ambition, you can do quite significant changes to the way that you do business quite quickly?
Okay. Well, I mean, there's a number of questions in there, and and of course, any company which wants to win the support of its shareholders has to be hugely committed to a steady improvement in all the ways in which it operates. And I think in what you've seen in Shell, you see that remorselessly, that we're continuing to improve our business, to improve the way in which we handle our emissions to the environment. And we continue to update you on that as part of the continuous improvement journey. So of course, we can do lots within the existing structure. And we would have done lots, and we will do lots. But of course, we can do so much more if we have a better, freer, and more liberating structure. I think on the issue of, if you like, the capital allocation framework and whether it's fit for purposes through all points in the cycle, well, the board have discussed that comprehensively, and we have tested it against models through all parts of the cycle, including high oil price. And we do believe it has a sort of medium-term solidity to it that we want to follow through all parts of the cycle, and that's what you've seen in the way we've chosen the allocations between capital, between distributions to shareholders and to the balance sheet. I don't know, Jessica, if there's anything you want to add to that?
So, Andrew, I think you said that well. I believe the framework is robust and is serving us well and will continue to serve us well. Of course, this very strong macro environment, the cash capacity of the company grows materially. You've seen that last quarter. And at those levels, it certainly gives us more flexibility in terms of where we land on that range. And I think what I would put that in the category of a good problem to solve. But overall, I think the nature of how we've structured the financial framework and the allocation process serves us well, and I think will serve our shareholders well.
Thanks, Jessica. Can we have the next question, please?
Certainly. Next, we'll go to Michele Della Vigna with Goldman Sachs.
Sir Andrew, Ben, and Jessica, thank you very much for your time, and congratulations on such an important simplification of your corporate structure. I had 2 questions, if I may. The first one is about your key divisions, which will remain centered in Holland, E&P, project delivery, and integrated gas. I was wondering, does it still make sense to keep the center of those divisions there when the country, I think, especially through the court ruling, has proven to be not necessarily one of the most friendly places to do business as an energy company. And then secondly, I was wondering if the tax domicile change to the UK could materially impact your tax rate outlook, or if really that ends up being any material effect. Thank you.
Well, look, thanks, Michaela. Maybe I'll take the first question, and then I'll ask Jessica to take the second question. Netherlands still remains a great place for Shell to do business. We've shown this very, I think, strongly over the last couple of years. We've committed to invest nearly 4 billion euros, primarily in the energy transition. And we do see the Netherlands as a place where we can actually demonstrate what's possible in the energy transition, certainly for the country, but also, I think, in the way in which we can, with the Netherlands, show leadership to Europe and indeed to the rest of the world. So I wouldn't consider this decision to be in any way a vote in the opposite direction. Quite the opposite. Our commitment to the Netherlands remains strong, and it will remain strong. And it makes perfect sense, given all of that we would base many parts of the fundamental business of Shell, in a global sense, here in the Netherlands. The businesses that you spoke about, along with a lot of activities in research and development, which are part, if you like, of the projects and technology group. We're clear on that. This is an adjustment to improve our financial efficiency, which involves the movement of a relatively small number of people to London and the holding of board meetings and executive committee meetings there. But in many other respects, our commitment and our presence in the Netherlands is unchanged by that. And we will want to continue to build on that, because there are many insights that we get here that we think have been valuable for the long history of Shell and will be valuable and remain so, for many decades to come. But Jessica, maybe you might want to add a bit more to the second question.
Good. So, Michaela, in terms of the expectations around tax, we do not expect this move to have any material impact in terms of our effective tax rate in relation to this move itself. Our tax rate is a function of the nature of our business, the location of our profits, and the mix of our business. That's really what drives the tax rate, and this move from a tax domicile perspective for the corporation should not have a material impact in and of itself.
Thanks, Jessica, and thanks, Michaela. Could we have the next question?
Yes, sir. We'll go next to Martijn Rats with Morgan Stanley.
Yeah. Hi. Hello. I have two, if I may. First of all, just sort of from a practical perspective, are there any sort of milestones, key dates that we should be looking out for? I recognize, of course, that December the 10th is an important moment, but thereafter, what are the sort of key milestones, and roughly how long will this take, so from a sort of practical point of view? And the second question I want to ask, which is slightly off topic, but we just finished COP26, and now that we've got you, I can't resist the opportunity to simply ask Ben, who wrote an eloquent article on LinkedIn about what do you hope to expect from COP26, if he could perhaps share a few words and thoughts on how the event eventually met or did not meet those expectations.
Okay, thanks, Martijn, and I'll obviously pass the second question to Ben put it to Ben in a moment. I think in terms of practical milestones after December the 10th, I can't give you specific dates, but obviously if everything is approved by the shareholders, we then have a set of articles of association where we've taken away some of the anchors that we're trying to move in order to think about converging into one line of shares and changing the tax domicile of the company to the UK. We as a board will have to meet at some time after this has been decided, obviously take stock as to how the world looks at that moment in time, and then make the decisions to go forward. I can't give you any firm dates other than it will be sometime in the early part of 2022. But Ben, maybe you can talk about COP26 and add anything to my answer if you feel it's needed.
No, I think that was perfect. On COP26, yeah, thanks for asking, Martijn. It's still a little bit early days. We haven't really been able to sort of listen back in with all the delegations back in our home countries to see exactly what the takeaways are. And we're also still studying what really came out. But I can say a few things. So first of all, I had 3 hopes for COP26. 1, more ambitions. I think there are more ambitions. Yeah, and of course we have to see exactly how it all adds up. I don't think it comes to 1.5 degrees, but I do think we still have a chance. And we do indeed have progress in the sense that we are ratcheting up ambitions to the point where it will ultimately need to be. Then I had a hope that Article 6 would get operationalized. And I think there are very clear indications that a lot of progress has been made. We haven't studied yet exactly what has been agreed on Article 6, but I do believe there is a material progress. And bear in mind, there has been almost 0 progress since Paris. So therefore, indeed, making a step now, I think, is important and therefore something to be positive about. Then the third one I had was, let's focus a little bit more on demand and let us do it on a sector-by-sector basis. I think there I have a question mark. I haven't seen much, to be perfectly honest. Many of the pronouncements, many of the eye-catching statements were all about somehow curbing supply. And while I'm not necessarily against that as a concept, because ultimately, indeed, we do need to also make sure that we don't lock in long-term development of fossil fuels that we are not going to need, I think ultimately this transition is going to happen on the demand side. And I don't think I have seen enough there to just say, yes, this was a good step forward. But maybe, Martijn, ask me again next time we speak, and then I will know a little bit more what really happened.
Thanks, Ben. And look,
thank you.
Yeah, and Martijn, I mean, if I could add, I think from the perspective of the board, of course there is more that might have happened at COP26, but there can be no doubt that the world as a whole wants to accelerate into the energy transition, not able to agree on everything, but that of course is exactly the kind of scenario that Shell is wanting to play into and to thrive into and fashion our strategy around, and part of the reason why we are making this change we've announced today so that we can move quickly and keep up with these changes that we think are going to come globally and provide opportunities for the business that we will create at Shell. So could we maybe take the next question now, please?
Certainly. We'll go next to Irene Himona with Societe Generale.
Thank you. Good afternoon. My first question concerns a reference you make today to a bill submitted to the Dutch Parliament introducing potentially an exit tax relating to dividend withholding tax. And I wanted to ask, even though you expressed the view that you would not be liable to it, what sort of magnitude could that potentially amount to in a worst case scenario? And my second question, just one of clarification, if I may, on the mechanism by which the new single share will be issued. Is it simply replacing the A and B on a one-on-one basis, or are you cancelling the A and B and then issuing a new share? Thank you.
Okay. So on the exit tax, I mean, I'd like to ask Ben to answer that question, and then Jessica can, I think, give you some more details about what will happen to the different classes of shares. But just, I mean, obviously, we made it clear as a board that we looked at a number of pieces of advice from several firms. We considered it ourselves, and we thought it was highly unlikely that this would be a material tax or a tax at all that we would have to pay. But maybe, Ben, you could explain in more detail.
Of course, and that's more or less it also, Irene. So, of course, there is no law. There is a draft proposal that has been modified a number of times, previous versions of which have been basically declared unconstitutional by the State Council, the highest authority in the country. Now, that may still mean that at some point in time one of these bills may come and may even be applicable. But at this point in time, we have no way of knowing. we also don't know whether that will apply to us. And we don't know exactly what at that point in time might or might not be in the bill. And we might also not know whether that actually is still constitutionally applicable, or whether it can or can't be challenged in a European tax court, in a Dutch tax court, or under the Dutch-UK tax treaty. Now, we've received advice from 4 law firms in the UK and in the Netherlands to see how this would play out. There's other considerations that we can also factor into it. And it's very clear to us that the likelihood of us being liable to pay any of this exit tax, if it were to materialize, can be ignored. And even if you could do some sort of risk assessment, what if, etc., we believe the benefits outweigh that risk cost. Now, if you could say, what is the worst scenario? I have no way of answering that question. That is essentially asking, how long is a piece of string? I don't know.
Thanks, Ben. And Jessica on the share classes and how they'll change.
Great. Maybe just one quick comment on the last question. To support our internal assessment and our external disclosures, we worked with 4 different law firms, both in the UK and in the Netherlands, to support our conclusions that we're representing today. In terms of what's going to happen with the shares, they'll simply be renamed. So there'll be no change in the shares. They'll go from A or B to ordinary shares, and there's no actions that any shareholder needs to take.
Thanks, Jessica. There will be a change to the ticker, but we don't know what that will be just yet. That has to be discussed with the exchanges. So can we have the next question, please?
Thank you.
Yes, sir. We'll go next to Christian Malik with JP Morgan.
Hi, thank you very much for taking my questions. 2, if I may. Firstly, just around this ability to sort of expedite also the kind of a high quantum of buyback. Can you help us draw a relationship between the share count reduction and the potential faster DPS increase? Does that relationship exist potentially, or get accentuated through this ability to reduce your share count a lot quicker in the context of the restructuring you've done today? That's my first question. The second question is, and perhaps sort of directed to you, Andrew, while we have you, is clearly this decision is there to improve, the efficiency of the portfolio. You talked about agility. I'd love to know a bit more about what you, the board, the management are thinking about how the portfolio in its current shape and size is efficient in the context of the equity market. And I say that in that, when there have been questions around potential spinning off of businesses like marketing in the past, clearly you've had a lot of restraints. I wonder if anything changes in your ability to not just be agile through a portfolio rationalization, but also to think about crystallizing and extracting value within your portfolio. And clearly that is associated with energy transition, particularly if investors don't necessarily gravitate to the portfolio as it stands today. Thank you.
Okay. Well, thanks, Christian. Clearly, I'll ask Jessica to answer the question on buybacks and earnings per share and so on as a result of that. But I'll obviously take the first one. It was directed at me. I mean, clearly we regard this as a very shareholder-friendly action that will allow us a much more transparent and less friction-free, more friction-free relationship with our shareholders and our ability to return funds to them and interact more generally. And as I said in the past, it sort of builds on our strategy that we've been working on for some time. Powering Progress to some extent is the high-level essence of how we think the company will shift over time to effectively provide most of the great things that Shell has provided in the past, but do that with less and less carbon, and that will involve big changes in the products we sell, and also in some cases in the markets that we will serve. And we've also been working quite hard, obviously between board and but very much implemented by management. To handle how we change the culture, how we change the dynamism internally, to be ready and to create what will be a very different kind of company as we go forward in the next 5-10 years in the future, in order to deliver, if you like, on Powering Progress. Now, I would be. It wouldn't be appropriate for me to comment on all the kinds of transactions that might be possible, certainly in detail. But I think you can imagine the sorts of things that have to happen if we're going to, in the future, deliver on umpiring progress. How in the future we're going to deliver the things that Shell is known for, but also enter new markets that might otherwise not have been accessible to us because of what's changing, in order to serve them with quite different products. Products that will be based more in power, will be based more in biofuels, will be based more, if you like, on things like carbon capture and storage and nature-based solutions. And some of that we can do organically, but some of that we will do inorganically. And clearly, older businesses in time, like our refining businesses, will be steadily, if you like, divested from the portfolio. But I wouldn't want to go into any more detail than that. The kind of change that's going to happen could be quite dramatic. And as a result of that, it's important that we have this kind of simpler structure so that we can make the right choices and expedite them in an effective way. But I've probably said enough on that. Maybe Jessica on the other question.
So Christian, through this simplification, we expect that the quantum of share buybacks that we can execute in a given quarter should essentially more than double. So that gives us a lot more capacity in terms of rapidly and efficiently and effectively returning distributions to our shareholders. And that's, I think, good all around. That, of course, does have positive implications for dividends per share and earnings per share. And that is part of our consideration when we think about shareholder distributions and in what form they should take. So clearly that is helpful from that standpoint, but it is one of many considerations that we have. I think that the main point is how do we expand the amount of share buybacks that we can execute, and how can we do that at the least cost and as effectively as possible with the market.
Thanks, Jessica. So could we go to the next question, please?
Certainly. Next we'll go to Lucas Herrmann with Exane.
Yeah, thanks very much, and good afternoon, all three of you. It's nice to have the opportunity. Two again, if I might. Firstly, accelerating the buyback seems an important component of all of this. I was just looking through, the buyback to date this morning, and it feels as though that's pretty much likely to come to an end within the next, 4 or 5 days, given the pace at which you've been buying. So why would you not accelerate the buyback, over the course of the next month or two, particularly given that this new structure is unlikely to be in place until well into the first quarter, if not the second quarter of next year? In other words, why not augment what you've already committed to the market to date? And the second question, if I might, is just what do you cede through giving up on this structure? It's been in place for 15 years. There's been reticence to change it historically. I appreciate there's some cost associated with it. But is there anything else that you're actually giving up as a consequence of no longer being a dual quoted stock? Thank you.
Okay, let me answer the second one, and then some of the detail on the buyback I will pass to Jessica. I don't believe we're giving up anything. I think it was something we're purely gaining. I think you've heard, Lucas, in the answers to other questions that we're certainly remaining as committed to the plan that we had to do an awful lot of work here in the Netherlands. And also to use this in many respects to continue to influence the global actions of Shell. But now we're able to do things with this simpler structure, probably quicker, and they'll be even more effective in the things that we are retaining. So I don't think that in and of itself this change is leading to any loss. And in many cases, it's all about gain and gain in agility and speed to actually transact our policies and transact our strategy to do well and to lead in many respects the energy transition as a business. Buybacks?
Yes. So, Lucas, thank you for the question. On the last question, I genuinely can't think of right now a benefit of the current structure. So it's another way of answering the question, and it's really about removing these constraints to make us strengthen our competitiveness going forward. In terms of the share buyback, so first of all, of course, we've announced some $9 billion of incremental distributions in the last 4 or 5 months. That's a sizable increase in the distributions to our shareholders. Obviously, there's been some limitations on what we can do given our hands were full with this process, and that does put some limitations in terms of how things can be done. Importantly, we've got the Permian transaction, which we hope will close in the coming weeks. And once that closes, we will inform the market in terms of our intention around how that will be distributed and when that will be distributed. But importantly, as I've also noted previously, in the fourth quarter, we expect to come out with further insight on the next tranche of shareholder distributions, and that will take into consideration the prior 4 quarters. And of course, that will capture the very strong Q3, and we'll see what Q4 has to bring for us, but certainly a very strong Q3 that should also influence the quantum of distributions that we would be targeting, and that will become clear in the fourth quarter. So I think all around, it's a story of increased shareholder distributions already demonstrated in terms of what we've already announced year to date, and very strong performance and a clear framework that will allow us to hopefully step up distributions in the fourth quarter.
Thanks, Jessica. Can we have the next question, please?
Next we'll go to Jason Gableman with Coward.
Hey, my questions have actually been answered. Thank you.
Okay, our next question then will come from Christian Mueller with ING.
Yeah, good afternoon, everyone. With regard to active shareholders, how do you look at the situation when you have only one share? It's let me say it is less complicated for someone to take action there. Is that a correct assumption or not? And my other question is about you spoke about the tax. So what about the probability to lose some subsidies because of leaving? Let me say to switch from The Hague to London. Have you made some calculations on that as well?
Okay. I didn't quite follow the second question.
I do. Yeah.
You can handle it, can you? Yeah. Okay. So I'll give the second question to Ben, but on the first question, this is an action that is designed to be shareholder friendly, and we believe that through being shareholder friendly, that we will have active discussions with all our shareholders. We'll listen to all our shareholders in a way that we can actually learn from them, so we can run the company better as a consequence of that, and generate greater returns for them. I think if there's something behind your question that implies we may do more of that, then I would say, yeah, we're on. But Ben.
Yeah, Quirijn, I think I know where you come from. So maybe for a bit of context, so we, as Andrew said, in the last 2 years, we have sanctioned 4 billion euros of energy transition projects here in the Netherlands. And we expect to do more because, also as Andrew said, we see the Netherlands as a very important strategic node from which we will build out our entire European energy transition strategy. Now, some of these strategies, of course, do require some policy support from governments or from Brussels, etc. And that indeed is important, otherwise it will not happen. But I cannot imagine any scenario where it would be in the interest of any government, for that matter, to just say, well, if your headquarters is not here, we don't want you to make these investments in my country. So therefore, I cannot see us actually losing the support of the very strong collaboration that we've had with the government here to work on a large CCS project, to work on a large hydrogen electrolyzer project, to work on a very large bio project, and to work on all the other things that we are working on. As a matter of fact, it is no different than what we are getting also in terms of German support in Germany, and we are not headquartered there. And the same is true in the UK. So I don't expect that to happen, Quirijn. It would be highly unusual and also highly counterproductive for everybody involved.
Okay, thanks, Ben. Can we have... Did you want to come back, Paul?
Yes, sir.
You're Quirijn, sorry. No, okay, so can I have the next question?
Yes, sir. We'll go next to Paul Cheng with Scotiabank.
Hi, good afternoon. Thank you. Two quick questions. First, I think it's for Jessica. With the change from the Dutch tax court to the UK, if we're looking at the outstanding tax, either asset, deferred asset, or that liability, is there any one-time cash settlement or that we expected to related to this change? And secondly, that we understand that you can't really talk about or that trying to quantify what may be your cost benefit or efficiency gain from the future change in the corporate structure related to this, but that by eliminate the dual or that the Dutch court and also concentrate just in UK. Can you talk about that? What is the tangible cost saving as of the current structure come from this simplification, or that number is so small that is really totally insignificant? Thank you.
Okay, I think maybe just divide Jessica first and then Ben.
Paul, thank you for your questions. In terms of the tax implications of the proposed move, as we've identified in the circular, we expect to have a corporate income tax associated with the move upon exit. We believe that should be no more than $400 million. That is net of using some tax attributes that we have. These attributes aren't currently on the balance sheet, so we don't expect any kind of balance sheet implications associated with that tax. Now, when it becomes a liability, that liability will show up and then we'll have to pay it, et cetera. But again, that's all around the $400 million number that's referenced in the circular. Hopefully that's clear.
Yeah, thank you, Paul. And if I got your second question correctly, but you were breaking up a little bit on me here, it was all about the cost benefit again. And again, I would say it is not so much a cost benefit in terms of numericals. Of course, we can do some calculations to see what is the benefit and how would it change maybe our cost of capital or whatever. But I do think that the real driver behind this is indeed, as we have said before, the agility. The fact that we are better able to do things that perhaps we would have impediments for, that will make us more nimble to do it, more competitive for that matter. And these are the more important drivers in my mind that sit behind this.
Thanks, Ben. Can we have the next question, please?
Certainly. Next, we'll go to Adam Matthews with the Church of England Pensions Board.
Thank you very much. And just really wanted to obviously note the important qualification related to the court case, which I welcome in the guidance notes that you published this morning. But specifically just wanted to say, should we be viewing this as Shell speeding up its approach to the transition? And this really positions you to be able to be as responsive as you need to be to sort of grasp the opportunities of the transition for the business?
Well, I would say yes. I mean, as Adam, I mean, the whole point, as we say, is to be more agile, be more flexible. Continue that process of getting better and faster at the transition. We've been positioning this for a while, and this is one, if you like, one plank of several in order that we can go faster into the transition. Our strategy, Powering Progress, was the first one. Changing the culture of the company and its shape is the second one, and this is the next one, which is really actually giving us the kind of financial structure and financial processes that allow us to continue to evolve the company to thrive in the energy transition. Can I have the next question?
Adma with Eumedion. And Riens Adma, your line is open. Please go ahead.
Yes, thank you. Yes, I have two questions. First, in order to achieve the creation of a single share clause, did you consider the route of converting the PLC into an NV and retain the headquarters in The Hague instead of retaining the PLC structure and moving the headquarters to London? Second question is on the implications of today's board decision on the implementation agreement of 2005 between Royal Dutch and Shell Transport. In that agreement, it was stated that proper account shall be taken in the creation and conduct of the new organization of the national origins, cultures and heritage of Royal Dutch and Shell Transport. Is that really still in place if, in fact, Royal Dutch will disappear as a consequence of today's decision? Thank you.
Okay. Look, I mean, I probably ask both my colleagues to add to my answers as this as well, because in both cases I have a much longer association with the company. But the reality of looking for the simplification was that the imposition of a withholding tax on dividends here in the Netherlands meant that we were driven to go to the UK because that was what was the most beneficial way of doing it for the greatest number of shareholders. I'm well aware that the change to the Articles of Association that we are proposing as part of the vote that will go to shareholders on the 10th of December, removes some of the anchors that were in there about things that we should do in the Netherlands. But I would say to you, and I've said several times, that this is a small change and has really no bearing on the commitment that you've heard both Ben and myself and Jessica talking about to continue to invest powerfully in the Netherlands in what we're doing and in the energy transition, and to create global activity, global centres or global leadership of many of the things that happen in Shell from here, well, where I stand in The Hague, and obviously our research and development activities in Amsterdam, but equally, you know, the pioneering work we're doing in places like Pernis. But feel free, both of you, to add to my answers. Maybe Ben first, and then Jessica.
Yeah, happy to do so. And thank Rins for the question. You know, you and I are both Dutch, and there is perhaps a certain sense of loss with the disappearance of the name Royal and the disappearance of the name Dutch. And I certainly feel that acute sense of loss. And I'm sure that many, if not all, our Dutch colleagues do, and hopefully also many of our compatriots who feel proud about this company and what it does and what it has achieved in the past. But the reality is also, as Andrew says, we have 8,500 people in the Netherlands working on providing energy, working on the energy transition. The Netherlands, as I said, is a strategic key country for enabling the energy transition in our portfolio throughout Europe. And of course, we have a very strong legacy position of the sort of technical heart of the company being in the Netherlands. We're not going to move all these people out, or we're not going to re-recruit them all in the UK. That strong heritage will remain. And that strong heritage will be deployed to working on the project, not just in the Netherlands, but also in other parts of our company. So in that sense, I don't think there is going to be an effect on how this company grew up and how it will use that historic strength to project into the future.
Jessica?
Perhaps just a couple words on the first question that you had. Over the last 16 years, we have looked for a solution to complete the unification ambition and simplify the company as we're proposing today. We considered the NV option, so an NL option, if you will, along with other jurisdictions. And this has had extensive review and consideration over multiple years before landing on what we're proposing today. So I would say today is a very well-considered proposal, and on balance in terms of what we believe is in the best interest of the shareholders in the company, we believe this is the best option, and sincerely hope that shareholders back us and see the benefit in what we're proposing today.
Thanks, Jessica. And Rins, just to add a little bit, it's only recently that I've been spending a reasonable amount of time here in the Netherlands. It would have been more had it not been for lockdown. But part of the reasons I chose to come to Shell was for the deep affection I have for the country and what it has given to the world. That's one of the reasons I was attracted to Shell. And so I don't intend to let go of that. Quite the opposite, because we've made this, I think, quite hard-nosed decision to make the company more effective and more able, I think, in many ways, to do good things for the world. Much of it still rooted here in the Netherlands. So could we have actually the final question then, please, I think, and then we'll probably stop.
Yes, sir. We'll take our final question from Robert Marshall Lee with O'Day.
Hello, can you hear me?
Yes, we can.
Just so interested in whether anything changes in terms of your capital allocation decisions. So in terms of your broad ideas of where best to spend the capital, does this meaningfully change the outlook or accelerate a transition in that respect? And does your cost of capital change very much in that assumption?
There is no change to the capital allocation or to capital discipline. This is something that we've put in place and implemented now. Over the better part of the last year, we feel it's a very important discipline, and I don't believe there's a change in the cost of capital. But I better just check with the Chief Financial Officer in case I've missed that one.
No, I think that's a fair representation, Andrew. And again, today is about, or what we're proposing today is about putting the right foundation in place and giving ourselves all of the tools necessary to make whatever choices and changes we think are appropriate from a corporate and capital perspective going forward. So it's really, how do we have all of the tools in the toolbox that are needed for us to compete effectively going forward?
Okay, well, thank you, Jessica, and thank you, Ben. And thank you to all of you for your questions and for joining the call today. I hope this is an engagement that's helped you understand the reason and the benefits of the simplification as we see it. So I wish you all a pleasant day and hope you and your families stay safe and well. Thank you.